Central Bank's decision was aimed at ensuring a continuous support to the domestic economy while simultaneously safeguarding the peg between the Namibian dollar and the South African rand. The decision to reduce the repo rate was made following comprehensive reviews of domestic, regional, and global economic development.
Inflation receded notably, and the projected medium-term inflation path has been revised downwards. Growth in the private sector credit extension (PSC) remained subdued. The merchandise trade deficit widened further, while the stock of international reserves continued to be sufficient to preserve the currency peg and meet the country's international financial obligations.
The governor of the bank says despite the slow growth in the second quarter, the Namibian economy did, however, record a slower growth rate of 3.5% during the second quarter of 2024.
Looking ahead, growth is projected to moderate to 3.1% in 2024 and 3.9% in 2025, compared to a firmer pace of 4.2% recorded in 2023. The anticipated slowdown is primarily attributed to the weakening primary industry, partly reflecting the prevailing drought conditions and sluggish global demand.
Since the previous MPC meeting, inflation has suppressed to the downside, falling from 4.6% in July 2024 to 3.4% in September 2024.
Going forward, the medium-term inflation forecast has been revised downward to 4.3% in 2024 and 4% in 2025, compared to the 4.7% and 4.4% respectively at the previous MPC meeting. The revised forecast is due to a more favorable outlook for international crude oil prices and a stronger exchange rate.
Namibia's merchandise trade deficit widened to $25.8 billion during the first 8 months of 2024, relatively to $21.2 billion in the same period of 2023. The stock of international reserves stood at $57.1 billion as of 30th of September 2024, compared to $60.8 billion at the end of July 2024. July Nafuka, MBC News, BoN.